Hey everybody, Ben Nelson, the Everyday Real Estate Investor here again. Thanks for tuning in, and again, I appreciate it. I really want to connect with people that are busy, that have professional lives, family lives, and maybe they just don't have the capacity right now to be full-time investors. Again, maybe that is a goal, but maybe it's not. Maybe they are just trying to add real estate investing in. They don't want to miss out. They're trying to figure out how to fit that in their life in between everything else. And so that's really the goal here is how to make it happen, strategies that work, talking to people that have done that, talking about shortcuts and tools to use and things like that to try to make yourself more effective, so you can spend less time on your investing, still be effective and be getting the same results, but maybe not having to spend so much time on it. So that's what we're after here. On that note, today, what I'm going to talk about is how to look at a real estate market and how to analyze that. And I'm going to provide some tools and some, probably on a future episode. And then I've mentioned the platform the community that I'm building there as well. Try to provide some tools to be able to get some of this information a little bit more quickly than having to do it all on your own. Because if you have to do this all on your own, then it's going to take a lot of time, especially if you're looking at a lot of markets. And trying to dial into where you want to be investing. And just to kind of digress here a little bit and pull back, I always want to remind people that it starts with, what are your goals? You always want to start with what are your goals? What do you want real estate investing to do for you? Because if you're trying to figure out and analyze a market and you haven't really thought through that yet, what are your goals? Do you want more cash flow? Do you want market appreciation? What type of product? Well, all of those things come into play when you're looking at markets and what they're going to do for you. So if you don't really know what you want real estate investing to do for you, it's not going to do as much for you when you're investing or when you're analyzing a market, because you may see what the market's doing, but if it doesn't translate to, if you can't translate to that, how does that affect my investment strategy, and how is that going to help my investment strategy, or is it going to fit with my investment strategy? Then you want that perspective going into it, I guess. So always start there. What do you want it to do for you? What are your goals? What are you trying to accomplish? And then be looking for the market that is going to help make that happen for you. So I'm just going to go through a list of 6 things that you want to look at. This is definitely not everything that you want to look at when you're looking at a market. These are kind of just high level categories to be looking at and analyzing when you're looking at what a market's doing. So the first one, not necessarily the first of the most important, but definitely important piece is the net migration in that market. Now you want to look at the state, you want to look at the particular market within that state as well, because people move around, and when people move, it creates either more or less demand, right? You see a lot of people that have been moving out of New York, and that have been moving out of some of these other states. And when you have a negative net migration, we have more people moving out versus moving in, that's going to obviously have an effect on supply and demand and on pricing. So the opposite is obviously true. If you have a market where lots of people are moving into and moving there, and they're having population growth, then you're going to have more demand for housing, and probably prices continuing to push up, or at least more demand for rentals and housing in general. And so there's 2 different pieces of population growth. There's natural growth, birth and death rates versus for people that already live there, and then there's people moving out versus people moving in. So natural growth is great, but net in migration is even better, because that means there's people that are moving from out of the area to in that area, and there's usually reasons for that. There's usually drivers that are bringing people that way. There's a reason people that want to be in that area. So that's a big thing to look at. And there's markets, you can find that information pretty easily just by looking at census data and things like that. But yeah, that's a really key one to look at. And then the other piece of that is what's the demographics of those people that are moving there, because it's going to affect the type of housing that is going to have an influence on, right? So if you have all retirees moving to one particular area, that's going to look different than a bunch of young professionals moving to that area. And it's not that either one is a good or bad thing. It's just you need to know what that looks like and know what they're wanting in housing, because it's going to be different. So just because people are moving there that's not enough information. You have to know who's moving there and for what reasons and what are they looking for in housing. The next thing, I kind of touched on this a little bit as far as like why people might be moving to an area, is jobs. What's being created for jobs? Are there companies moving to that area? And bigger picture, well, this will fit in with something later, the last one, but when you see companies moving to an area, again, there's usually a reason for that. They have some sort of incentive to move there. And usually when one does, you start to see more and more start to head to that area. So you can kind of see the trend and, follow the companies. You see companies starting to move into areas, you're probably going to see more, and you can kind of get ahead of that trend. So a big thing on jobs, so obviously our jobs being created, our jobs growing, and then what are the income levels of those jobs? What types of jobs are being created? What are they, entry-level jobs? Are they high-paying professional jobs? Are they tech jobs? What type of jobs are being created? And then what, not just what's happened, what's trending, what's coming down the pipeline, right? And are companies moving in or out? Just like net migration, are companies leaving, or are companies more drawn to that area? Because that's going to be continued job growth in that area. And the income levels part is important, and that's going to get into with a couple of these other points of what to look at. That'll be an important piece to be looking at. And I'm going to jump ahead. I had it a little bit out of order here. So price versus rent ratios. So does it make more sense to buy or to rent? And then what are the trends there? Because if you're buying a rental property and you're buying it in an area, now there's all sorts of other things around this. Again, like I said, this is not the full list of what to look at. There are some areas that, even though it makes more financial sense to buy versus rent, like you could buy a house for a price that your mortgage payment's going to be quite a bit less than what rent would be, there are other reasons why people continue to rent. And it could be cultural, it could be demographics, it could just be transient. People have moving in for jobs for a short amount of time, right? They're going to be there for a year or two. There's a lot of that in the area, and so there's less reason to buy, and it makes a lot more sense to rent instead. So there's all sorts of reasons behind that. So you have to look closer at that as well. Just because it makes more sense to buy doesn't mean that necessarily that is happening in that area. But it is a thing to look at, price versus rents, and then what are the trends there. And if that balance is going to shift and it's a market where people would rather buy than rent, and things are shifting to where it's becoming, less, there's less of a reason to rent, and they're going to start leaning more towards purchasing, then that's going to affect your tenant base, right? Again, this is assuming that you're holding something long-term and having it as a rental. If you're looking for appreciation, maybe it's better that it's shifting that way, because then you're going to have more buyer demand, right? So it all kind of depends on what your strategy is and what you're after. And then price versus income. This is the one I meant to skip to. Price versus income and rent versus income. So looking at the jobs is super important, and the income levels of the jobs, because your price versus income and your rent versus income is going to be, the higher that ratio is, I guess. So like the more of their income they're paying towards rent, the less likely, or for housing, for buying, the less likely that you're going to be able to continue to push prices and rents, right? So if high-paying jobs are coming in and that ratio is low, where they're spending less money on their housing, there's a lot more room for rents and prices to increase, because they have more disposable income, right? And I mentioned this in, which I haven't published yet, but a market update video I just am putting together, that, with interest rates going up, this is something to really be looking at, because some markets, it has really affected affordability with interest rates going up so much. And it's affected your house payment no matter what in every market, right? But in some markets, it makes a much bigger difference than others. There are some markets where, yeah, it sucks that rates have gone up, but it's not stopping people from buying, because they still have enough disposable income. They have, that ratio was so low still, that the interest rate bump has not affected it to the point where they can't buy anymore, right? So that's something to definitely be looking at. How much room for growth is there with the jobs and the incomes that are there compared to the current pricing? and current rents. Ability to expand. This is one that I think is overlooked sometimes, but ability to expand can be a couple things. It can be natural constraints. You look at, markets like the Bay Area, San Francisco Bay Area, right? You've got a bay, like you've got a physical barrier that you can't possibly build more in one direction. And it's difficult to expand in other directions, right? So you're constrained physically with the ability to increase supply. That is not automatically maybe, but that's a huge driver of price appreciation, if that's what you're looking for, because you're constrained in how many more housing units you can supply. And there's all sorts of examples of that. Whereas you look at other markets where you can just sprawl, right? You can just continue. So I would think like Phoenix and Las Vegas and some of those markets, but they've seen huge price growth as well. So it is just one factor, but it is one thing to look at for sure, is the ability to expand. The other than physical restrictions, politically, you can have restrictions on expansion, right? So you can have a lot of zoning restrictions. The policy can be not anti-housing, but just make it difficult for developers, right? So there's some markets that are really, really easy and it's a lot quicker to build in. And there's other markets that are a lot more difficult and more expensive to develop. And it's, I won't get political in this, but it is interesting to see the markets that tend to be harder to develop in often are the higher priced markets. And I'm not saying that's the only reason, but I would say that that's a factor for sure. If it takes you 2 years to get through, development, or 3 years to get through the whole that's a huge delay in providing housing. And it's a lot of red tape, and some people don't want to go through it. Where I'll just go to a market where it's easier to develop and just do it there. I can do the same thing in a different market. So not being political, just saying that that's something to look at for sure. If there's constraints politically, it's harder to do. It's going to be a restriction on supply generally. And then the last thing, this actually goes right along with what I was just saying, is the political climate. So we were just talking about the political climate with the ability to expand supply, right? This is more, it's that for sure, but it's also, if you're having rental properties, what does landlord-tenant law look like? Is it more shifted towards the tenant side, or is it more shifted towards the landlord side, or is it somewhere kind of in the middle? So, I'm here in Oregon, we have statewide, it's not rent control, it's actually rent stabilization, but it limits how much you can raise your rent on current tenants. And there's a lot of landlords that are upset about that, right? And a lot of people, and it's actually, I think California, I don't remember if I think it's statewide. I saw a post about that as well. They're doing something very, very similar to what Oregon has done. And I own rental properties, and honestly, I think it's a reasonable thing. There's lots of things that are it's kind of a middle ground deal, the way that they set it up, in my opinion. So some laws are not necessarily bad. It's just how much is it weighted? There are definitely markets that are completely in the favor of the landlord. As an owner of rental property, that's probably the side that that's going to be in your benefit, right? And there's some that are completely in the favor of the tenant, where basically the tenant almost has more rights than the property owner does, right? And so that's going to be a lot more difficult. I personally would avoid those markets. There's not a lot of reason to invest in those markets, in my opinion. It's just so challenging in some of those things, and it's just not worth the battle. But some people do, and it works out. They know how to work around the system, and they know how to make it work. But if you're looking for like the less difficult road, right, then those are markets to avoid. If you are looking at what the rules are, what the laws are, and the trends. Again, all of these things are what are the trends. So what is the political climate now, and what's coming down? Are they changing, right? And using Oregon as an example again, is it going to get less constricting on landlords or or more constricting. It's probably not going to get less, right? Because it's been going down the road of being more favorable towards the tenant. And so it's it's probably not going to shift back the other direction, at least not anytime soon. So hopefully those are helpful to you. These are, again, high level things to look at, just kind of as a starting point to just narrow down a market. This is going to get you heading in the right direction, right? So you can look at some of this high level data and say, okay, these markets I was thinking of, but like this one has negative net migration. That doesn't make sense. Let's kick that one out, right? This one, the jobs are like leaving the area, or incomes are too low versus prices, right? So let's kick that one out. And you can really start to narrow down on what markets are going to be better to look at for future growth and for the goals that you have set out for your investing. So again, just to recap on what the 6 were that we went over today. The number 1 is net in migration. How many people are moving in versus moving out? Jobs, income level, what kind of jobs are being created? Are companies moving to the area? All that stuff. Ability to expand. What's constricting supply, if anything? And again, some constriction is actually good versus, okay, maybe I'm making a opinionated statement there, an opinion statement. Some constriction actually does help growth, right? Because it constrains supply. Not saying that that's a good thing, but for price growth, it does typically help that. So just pointing out a negative, quote unquote, can actually have a positive effect if you're an owner of real estate. Price versus rent ratios, price versus income, and rent versus income, and what kind of room is there for growth, and then the political climate, how easy or difficult is it for you as a developer, as an owner of real estate, as a landlord, to be able to do what you want to do without having the law against you, right? So again, thanks for listening. I am really close to getting that platform built out so that we can have a community for everybody to connect and have some more resources on there. Thanks for bearing with me on that. I'm excited to get that launched. I do have a goal to get that up. At least the initial, I'll continue to add stuff and tweak it and all that sort of thing, but at least have the base of it together by the end of June here, so that we can at least have a community to connect and start meeting each other and tossing ideas and thoughts back and forth and encouraging each other. Also have a couple awesome interviews lined up, so don't miss those. We'll be talking to some great entrepreneurs, real estate investors, about what they've done in their journey, and a couple of them have some great strategies and services that they can offer to help you with your investing goals as well, potentially. So don't miss those. Thanks again for tuning in, and until next time, make it a great rest of the day.